Are you ready to take the leap and start investing? Whether you're a complete beginner or have dabbled in investments before, this guide is here to help you navigate the exciting world of investing in 2023. Investing can be a powerful tool for growing your wealth and achieving financial goals, but it's important to understand the basics before diving in. In this video, we'll explore what exactly an investment is, break down the different types of investments available, discuss where to invest your hard-earned money, and provide valuable tips for beginners like yourself. So grab a cup of coffee or tea and get ready to embark on your investment journey with us. What is an investment? What exactly is an investment? At its core, investing refers to the act of allocating money or resources with the expectation of generating a return or profit in the future. Rather than simply saving your money in a bank account where it may earn minimal interest, investing allows you to put your money to work and potentially grow it over time. Investments come in many forms, from stocks and bonds to real estate and mutual funds. When you invest, you are essentially purchasing an asset that has the potential to appreciate in value or generate income. One key aspect of investing is understanding risk versus reward. Generally speaking, investments with higher potential returns often come with greater risks. It's important to carefully assess your risk tolerance before making any investment decisions. Another important concept is diversification. By spreading out your investments across different assets or sectors, you can help mitigate risks associated with any single investment. Investments are vehicles for growing wealth by putting your money into assets that have the potential for appreciation or generating income over time. Understanding how investments work and finding the right balance between risk and reward is crucial when embarking on your investment journey as a beginner investor in 2023. How to invest: the basics. Investing may seem intimidating for beginners, but it doesn't have to be. Once you understand the basics, you'll feel more confident in making smart investment decisions. Here are some key points to consider when starting your investment journey. First and foremost, educate yourself about different investment options. Understand the risks and potential returns associated with each type of investment. This will help you make informed decisions that align with your financial goals. Next, set clear objectives for your investments. Determine whether you're investing for short-term gains or long-term growth. Your goals will shape your investment strategy and asset allocation. Diversification is another important aspect of investing. Spreading out your investments across various asset classes helps mitigate risk by not putting all your eggs in one basket. Keep an eye on costs when choosing an investment platform or broker. Fees can eat into your overall returns over time, so opt for low-cost options whenever possible. Consider starting small and gradually increasing your investments as you gain experience and confidence in the market. It's essential to start somewhere rather than waiting for the perfect moment. Don't forget about patience and discipline. Investing is a long-term game that requires perseverance through market fluctuations. Stick to your strategy even during turbulent times. Remember, investing is a journey of continuous learning and adaptation. By understanding the basics and staying committed to sound principles, you can pave the way towards financial success. Different types of investments. When it comes to investing, there is a wide range of options available. Each type of investment has its own unique characteristics and potential returns. Here are some different types of investments that beginners should consider. 1. Stocks. Investing in stocks means buying shares of companies. These can be individual stocks or stock funds, which offer diversification across multiple companies. 2. Bonds. Bonds are debt securities issued by governments or corporations. They pay interest over a fixed period and return the principal amount at maturity. 3. Mutual funds. Mutual funds pool money from multiple investors to invest in a diversified portfolio of assets like stocks, bonds, or both. 4. Real estate. Investing in real estate involves buying properties for rental income or capital appreciation. 5. Exchange-traded funds, ETFs. ETFs are similar to mutual funds but trade on stock exchanges like individual stocks. 6. Commodities. Investing in commodities means trading physical goods like gold, oil, or agricultural products. 7. Cryptocurrencies. Cryptocurrencies like Bitcoin have gained popularity as an alternative investment option with high volatility and potential returns. It's important for beginners to understand the risks associated with each type of investment before diving in. It's also wise to consult with a financial advisor who can provide guidance based on your specific goals and risk tolerance level. Where to invest your money? When it comes to investing your hard-earned money, there are plenty of options available. The key is finding the ones that align with your financial goals and risk tolerance. Here are a few places where you can consider investing your money. 1. Stock market. Investing in individual stocks or exchange-traded funds, ETFs, can provide potentially high returns over time. However, it's important to do thorough research and diversify your portfolio to minimize risks. 2. Bonds. Bonds are considered safer investments compared to stocks as they offer fixed income over a specific period of time. They can be a good choice for conservative investors looking for stability. 3. Real estate. Investing in real estate, whether residential or commercial properties, has long been seen as a reliable option for wealth accumulation. It provides both rental income and potential appreciation. 4. Mutual funds. Mutual funds pool money from multiple investors to invest in diversified portfolios of stocks, bonds, or other assets managed by professional fund managers. 5. Robo-advisors. Robo-advisors use algorithms to create personalized investment portfolios based on factors such as age, risk tolerance, and investment goals. 6. Cryptocurrencies. Cryptocurrencies like Bitcoin have gained popularity in recent years due to their potential for high returns. However, they also come with higher volatility and risks. Remember that every investment carries some level of risk. Therefore, it's essential not only to diversify but also ensure you understand the nature of each investment before making any decisions. Conclusion. Investing may seem daunting at first, but with the right knowledge and strategy, anyone can start building wealth for their future. By understanding the basics of investing and exploring different types of investments, you can make informed decisions that align with your financial goals. Remember to always do thorough research before making any investment decisions. Consider factors such as risk tolerance, time horizon, and diversification when choosing where to invest your money. Whether it's stocks, bonds, real estate, or mutual funds, each investment option has its own set of risks and potential rewards. It's important to note that investing is a long-term game. Patience and discipline are key virtues when it comes to growing your portfolio over time. Stay informed about market trends and economic developments, but avoid getting caught up in short-term fluctuations. Consider seeking professional advice from a financial advisor who can help guide you through the complexities of investing. They can provide personalized recommendations based on your individual circumstances and help you stay on track towards achieving your financial objectives. So don't let fear or lack of knowledge hold you back. Start taking steps today to become an investor in 2023 and begin building a brighter financial future for yourself. Happy investing!